This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Greece is the word. Multiple reports tonight that Greece has agreed in principle to an agreement with its creditors regarding its debt.
Setting the tone, Cisco, the latest Dow component to report earnings, topped Wall Street estimates as the Nasdaq now sits just 200 points away from 5,000.
Eroding assets, how you can avoid making retirement mistakes that could cut your savings by as much as 25%. All that and more tonight on Nightly Business Report for Wednesday, February 11th.
Good evening, everyone, and welcome. Lots of developments late in the day today. Multiple reports late this evening now that Greece has reached an agreement in principle with its creditors regarding its debt. Talks will continue through Monday to hammer down the details. The reports come after Greece's finance minister today presented his plan to ease the terms of his country's bailout to other finance chiefs of the Eurozone, along with the heads of the IMF and the European Central Bank. The markets did respond to these reports. Stock futures rose, as did the euro against the dollar, and the Treasury bond prices fell. Bill Adams is PNC's senior international economist. He joins us now to discuss these new developments, the latest out of Greece. Bill, earlier this week or late last week, you were on with us and you predicted that there would be some sort of deal to avoid the worst outcomes here. What do you think they agreed to? We don't know many of the details.
We don't yet, and I think that is indicative of the fact that we're probably not quite at the final deal yet. I think an agreement to agree is not quite the same as an actual agreement. We'll have to see what we get in the next round of this, but I think we weren't really expecting a final deal probably until later in the month. So this is more or less in line with expectations.
Ideally, what would the markets like to see contained in this deal?
Well, I think there are lots of different ways that they can cut it, and a lot depends on how Europeans want their own politics to play out. I think a deal that will ensure that Greece can eventually sustainably grow and that Greece can service its debts and that the Eurozone institutions hold together is really those are the keys that the markets are looking for.
I think most people would say that the social fabric in Greece was under extreme stress. There was high unemployment. There is high unemployment. Pensioners saw their retirement payments cut. Those are the kinds of things that can really cause civil unrest, and we've seen it in Greece.
That's definitely the case, and I think this agreement is about how to balance the needs of having the financials work out in the Eurozone with the social issues that caused the far-left party to win in this January election.
Bill, is it safe to say that at this point an exit from the Eurozone is probably off the table for Greece?
I think it's quite unlikely at this point. It's been unlikely coming into this. I don't know that the news that we've seen today necessarily changes my view of it. At this point, it seems pretty unlikely that it could fall apart, but I don't know that I'm more convinced by an agreement to agree to agree at some point than I am by where we were coming into this week.
I guess the delicacy of the dance is to come to some agreement that maintains some of the strictures in the original bailout provisions, but doesn't open the door for other parts of the European Union, whereas Portugal, Italy, Spain, Ireland, to come back to the table and say, hey, we want what Greece got.
I think that's definitely the case. That's certainly what Germany and the other northern economies are thinking about in these negotiations. And for the Greeks, they won an election, the current government won an election by promising an end to the bailout, an end to austerity. Mm-hmm. And so they have to come up with something that both wins, where the Germans look like they were able to hold the line, and the Greek government is also able to say that they were able to increase spending.
All right, Bill, thank you very much. We appreciate it. The devil will be, of course, as always, in the details.
We turn now to earnings and Dow component Cisco, which reported after the closing bell. And the results, at least initially, may give tech investors something to smile about. Often considered a proxy for business spending, Cisco said demand for new hardware outweighed headwinds from the strong dollar. The company, whose shares are up about 20% since October, has benefited from pickup in demand for its largest single product segment, switching equipment, which is what handles all that internet data traffic. Cisco earned 53 cents a share, 2 cents better than estimates. The company brought in almost $12 billion in revenue for the quarter, also topping expectations. Cisco also increased its quarterly dividend to 21 cents, and shares were initially higher on the report. John Fort joins us now with his one key takeaway from Cisco's report. Good to see you, John.
Well, good to see you, Sue. I think the one key takeaway from this report is that Cisco is seeing stronger growth than its other peers who sell technology to big companies, and it's seeing it even in places where you wouldn't expect it, like in Southern Europe. John Chambers' optimism on the call was almost comical. I mean, he was talking about how he ran in the morning and then lifted weights and he just couldn't contain himself. Normally, he says with all appropriate caveats, he's going to say something positive. He still said stuff like that, but there was a lot of optimism here for a community of investors who saw quite a bit of taking down of guidance given the strong dollar throughout the earnings season.
This is a hardware company, right? Basically.
Well, they've got quite a bit of software too built into
their system.
Kind of like Apple that tries to tie the services and the software.
Is this then fairly called a bellwether for capital spending?
No, it's not anymore the way that it used to be. We look at what Oracle is experiencing with software. We look at what the PC market is experiencing with those kind of headwinds. It's clear that enterprises are spending on certain kinds of things, but that's not the same sort of stuff that carriers are spending on. They're cutting back. That's not the same sort of thing that governments are spending on. They're not as strong. So we're seeing different pockets of strength. Cisco's hit a strong pocket, but that doesn't mean that everybody's going to see that same sort of growth.
All right, John, thanks for spending time with us. We appreciate it. John Fort.
All right, while Cisco's numbers were strong, as John just mentioned, it's been a different story for some other stocks in the technology sector. After coming off a strong 2014, hopes were high for the group heading into this year, but it hasn't worked out that way. Morgan Brennan explains why.
Tech was on top of the world last year, but in 2015, so far, the sector's been one of the worst performers. Why? Well, profit-taking, disappointing earnings guidance, and slowing global growth are all taking a toll on tech. Analysts are also keeping a close eye on currency, since an estimated 60% of the sector's revenues come from abroad.
It's going to impact a whole universe of companies that are based here in the U.S. So it will have an impact. I think the internet names in general are big enough to power through it, but it's certainly going to slow growth and hamper the international operations for a lot of these companies.
That's already playing out among the largest. Intel and Microsoft, two stocks that outperformed the market last year, have each tumbled in 2015 after providing guidance below analysts' expectations. But there are exceptions, most notably Apple. The hardware giant is trading at an all-time high with a market capitalization above $720 billion, the largest ever for any U.S. company. Apple's recent earnings trounced expectations, and that's had ripple effects to its suppliers as well. Chip makers including NXP Semiconductors, Avago Technologies, and Texas Instruments have all gained on the heels of Apple's latest report. Another bright spot? Amazon. After tumbling in 2014, the e-commerce giant reported a fourth-quarter profit, sending shares 20% higher since the start of the year.
We're very bullish on Amazon. We continue to like Facebook. I think both of those companies are positioned very well. Google is another name that we like over the long term, although there are challenges in the core business slowing down.
Analysts also like cybersecurity stocks as both the federal government and businesses beef up their defense. Names like Fortinet, Akamai, and FireEye, which reported earnings this afternoon. But as 2015 unfolds, the broader sector will continue to be a focus, since tech drove the majority of gains for the S&P 500 each of the last 2 years. For Nightly Business Report, I'm Morgan Brennan.
Stocks finished mostly flat today as the markets awaited word on the developing situation with Greece. The Dow recovered from being down triple digits to finish off 6 points to close at 17,862. The Nasdaq was the bright spot. It rose 13.5 points, and the S&P 500 was flat.
Closely watched oil prices fell once again after U.S. stockpiles hit record highs. Crude inventories up almost 5 million barrels last week to the highest level since record-keeping began in 1992. That pressured prices. WTI settled below $50 a barrel, down $1.18 to $48.84. Brent crude also fell, as you see there.
And it was a very busy day in Washington. The president asked Congress to authorize a 3-year fight against ISIS. The House passed the Keystone Pipeline bill, and the debate over how to fund Homeland Security is really heating up. John Harwood is in Washington tonight, and you have a lot on the agenda, John. Should we start with Keystone first?
Sure. The House has now passed the Senate bill on Keystone with 29 Democratic votes. That's not enough to override the veto that President Obama has promised. So we're looking for that bill to go to the president fairly quickly, for the president to veto it, and then we're going to find out whether or not there are negotiations between Democrats and Republicans on some sort of compromise in which the president might allow Keystone to go forward in return for from some concession for Republicans. But Republican aides on Capitol Hill tell me no negotiations have begun yet.
The president sent, I guess, a resolution up to Capitol Hill today seeking the ability to wage war on ISIS. Will he get it?
Yes, he'll eventually get it. It'll take weeks, perhaps months, to work through this. You have Democrats who think that this provides too much room for an additional military conflict. Remember, President Obama ran for office proposing to end the Iraq War, and Republicans who thinks it ties the president's hand too much by committing not to have long-term ground troops. So eventually, though, I think it's not going to be tenable for Republicans to block this use of force, which they've called for, or for Democrats to undercut the commander-in-chief of their party.
Yeah, John, it's interesting at the time when the president is talking about the threat from overseas, the threat from ISIS, the Homeland Security funding is all caught up in the fight over immigration.
It is. Republicans, of course, withheld full-year funding from DHS in order to protest and try to roll back the president's immigration executive order. I think that is ultimately going to be a losing strategy. One Republican senator, Mark Kirk of Illinois, came out today and said this is the wrong battle at the wrong time. The Republicans in the Senate cannot pass the measure in the House that rolls back the president's order. So I think we're in a process now of Republicans climbing down from that effort. We don't know how quickly that will come because John Boehner said today, no, the House needs to try and pass this bill again. Mitch McConnell says he can't do it. We're in an impasse, at least for a while.
All right, a very busy John Harwood in Washington for us tonight. Thank you, John.
Well, the federal budget deficit for January was slightly smaller than economists expected. This is strong growth and rising employment helped raise tax revenue. According to the Treasury Department, the federal government ran a deficit of $18 billion last month, and that compares to the $10 billion shortfall a year ago in January of 14.
Another shot across the bow of the unions in the ongoing labor dispute at the West Coast ports. The Pacific Maritime Association now says it will suspend loading and unloading of ships starting tomorrow and running through Monday. The PMA, which represents about 70 shippers, did the same thing last weekend as well. The association has accused the union of conducting slowdowns and other actions in an attempt to influence contract negotiations.
Still ahead, the common mistakes people make that cut their retirement savings by as much as 25%. We'll tell you how you can avoid them. Bank of America reportedly helped some clients avoid taxes. According to the Wall Street Journal, the bank used funds from its U.S. unit to finance transactions by its European investment banking arm that helped hedge funds avoid taxes on dividends. The bank has since phased out the program and in a statement says it no longer finances dividend arbitrage activity.
A stronger dollar weighed on Pepsi's fourth quarter, but its earnings still beat, and that's where we begin tonight's market focus. The soft drink maker's Frito-Lay snack business came to the rescue since higher sales in that division helped to offset pressure from currency headwinds. The beverage giant also said it would buy back $12 billion worth of shares, and it hiked its dividend by 7% to $2.81 a share. The CFO says the company's diversified product offering bolstered the results.
The innovation is working well, and that combined with the brand support that we've been able to put behind it, because we have been growing R&D spending faster than sales, and we have been growing A&M spending. That's what's making PepsiCo work right now, and we're doing it in a very sustainable way.
The shares rose about 2.5% to $100.40. Time Warner's earnings beat estimates, but revenue missed, and that was mostly due to declines at its Warner Brothers movie studio. The company also upped its dividend 10% to 35 cents a share. Shares were up just a fraction to $81.01. Time Warner's former unit, AOL, also out with revenue that trailed consensus. Growth in its advertising revenue did help the company post better than expected earnings, but subscription revenue fell as higher pricing didn't offset a drop in subscribers. Chief Executive Tim Armstrong said currency headwinds have been an issue, but it isn't as affected as other companies.
Under 20% of our revenue is international. It's growing, but it's under 20%. So it's probably more muted than a company that's got 50, 60, 70% of their earnings coming internationally. But I think the swing in the dollar has been really large. I mean, I think if you look at the last 6 months and you look at the charts, it's hard to say that's not one of the mega trends that will affect people's earnings.
Still, shares tumbled 10% to close at $40.22. Shares of Rite Aid rose on news of an acquisition. The chain will buy pharmacy benefits manager Envision Pharmaceuticals for about $2 billion. The move comes as the company looks to better its position in the changing healthcare environment. Shares were 6.5% higher to $8.08.
The generator maker Generac reported strong results, and it said it sees 2015 sales increasing. This as the company saw an increase in sales in both its commercial and its industrial division. Still, the stock was up about 3% today to $48.94. Pier 1 saw its shares plunge after it cut its full-year guidance, pointing to higher than expected expenses. Separately, the retailer announced the retirement of its chief financial officer. The stock fell 24% today to $12.84. Whole Foods earnings were better than expected, while sales were in line. The company was able to attract more customers to its stores during the quarter. That sent shares much higher initially after the close. Look at that graphic. During the regular trading session, they were up a fraction to 53.51. Meanwhile, shares of Tesla plunged right after the close when it reported sales and a quarterly loss that were below estimates. The electric car maker also did not deliver as many cars as it expected to, which it blamed on a variety of factors like the weather and issues and shipping problems. As you can see, shares dropped in initial after-hours trading. Before the close, the stock was off more than 1% to $212.80.
Americans are draining their 401k retirement accounts early. A new study out says that working Americans approaching retirement have reduced their retirement wealth by 25%. This leakage or pre-retirement withdrawal has some asking if the rules need to be changed. Joining us to discuss this is Ivory Johnson. He is founder of his own wealth management firm, Delancey Wealth Management. Good to see you again, Ivory. Welcome back.
Welcome. Thank you.
What do you make of this report, and why does this happen? Why are we reducing our retirement when so many of us are so worried about retirement?
Well, I think a big part of it is investors don't have any type of a financial plan. And as a consequence, they're less likely to have a budget. They're less likely to have an emergency fund. In many instances, they haven't prioritized their goals. And as soon as they hit a rough patch, they go to the one place where they do have money, and that would be their retirement plan.
So they're using, Ivory, their retirement plan as their emergency fund. They hit a hardship. They take out a loan. It becomes their piggy bank, and they shouldn't do it that way.
That's exactly right, because when you take money out as a loan, not only are you paying it back with after-tax money, but that money isn't growing tax-deferred. If you take a cash-out option, you've paid the taxes up front, and then you're paying the 10% early withdrawal penalty. So it's very punitive in nature. But let's not forget that even though corporate earnings are going up, and this is another issue, wage growth has been very tepid. Mm-hmm. And so what that means is, while they're not being paid more, their expenses are still going up in the form of higher health care, a lot of it's education. And if you look at two reasons you can take a hardship withdrawal, two of them, and I don't think it's by accident, is health care and paying for college education. So
should that change then? I mean, should they tighten up those rules so that you can't touch it for that? That would be a hardship, I would think.
I don't know that you can regulate responsible behavior, for lack of a better word, If you want people to put less money out, restrict what they can take out. What I will say, though, is that employers do have a fiduciary responsibility with these qualified plans to provide certain services. I think if they make the financial literacy a lot more robust and create that foundation, people will be less likely to use their retirement plan as a piggy bank.
And to build, as you say, that separate emergency fund. Ivory, correct me if I'm wrong on this. If you leave a company or you're laid off from a company and you have an outstanding loan on your 401k, what happens?
Well, that counts as early withdrawal. So it becomes immediately taxed, and you're given the 10% 72T penalty. So that's the problem when you borrow money.
It's a huge problem. Think about that. If you have a loan that you intend on repaying and you get laid off, you either have to put that money back in or it counts as a taxable penalty-prone withdrawal to you, right?
And to add insult to injury, as you get unemployment benefits, those are taxable. So not only have you lost your income, but now you have a tax issue.
This is getting scary. Okay, so let's get some advice for our viewers tonight on what the one recommendation you would have for them to do so that they aren't so tempted to touch that retirement account.
I think they should put together a plan and prioritize what it is that they're trying to accomplish. Because if you have an emergency fund and you haven't maxed out your credit cards, that gives you some cushion so that when you do go through a rough patch, you don't have to access your retirement plans.
All right, Ivory Johnson. Ivory, thanks for joining us.
Thank you.
Delancey Wealth Management. Coming up, Washington State's growing business problem, one it probably didn't see coming just a few months back. The FBI wants to know how fraudulent tax returns were filed in numerous states through TurboTax. As first reported by the Wall Street Journal, the agency is looking into how personal information used to file the returns was obtained. As many as 19 states have been affected. Intuit, the parent company of TurboTax, said it did not believe the fraud resulted from a breach of its systems.
Colorado collected about $44 million in new sales and excise taxes last year from its newest industry, recreational marijuana. But that was below projections of $70 million. Colorado was the first government to regulate marijuana production and sales.
Recreational marijuana is also legal in Washington, but that state's tax rates on pot are vastly different from Colorado's. And that's just one of the issues plaguing the new industry and causing some growing pains, if you will, for a lot of marijuana business owners. Jane Wells reports from Vancouver, Washington.
And this is the kind of lifestyle that we were looking for.
Tom Lauerman hoped to ride the green wave of legal marijuana in Washington state.
Our garden is called the Garden of the Green Sun here in Washington.
But a funny thing happened on the way to profitability. They grew too much pot. Prices plummeted.
In the early days, we were able to get like $1,700 to $2,200 a pound.
Wholesale?
Yeah, wholesale. Now it's like $700, $800 a pound.
Is that still profitable?
No, it's not profitable at all. I've got most of my stuff stashed away for later.
How can there be too much supply for a product where there seems to be such high demand? There are several reasons, most of them due to the difference in the way Washington has set up legalization versus Colorado. First, in Washington, you can grow pot outside, and the weather made for a bumper crop. In Washington, the taxes are higher, and medical pot here isn't taxed at all, so many locals are not switching over. In Washington, the state handed out growing licenses more quickly than retail licenses, creating an imbalance between farms and stores, at least temporarily. And in Washington, they are not drawing the same number of out-of-state tourists that Colorado does.
There's 45,000 extra pounds floating around out there with no home right now.
Too much pot that's going on in Washington.
Watching this unfold are entrepreneurs like Ada Gonzalez in California, whose G Pharma Labs makes a popular line of cannabis-infused products like chocolates.
This is made in our kitchen.
Gonzalez wants to expand into other states, including Washington.
We're going to be able to go in there and we're going to buy facilities for pennies on the dollar. My dream is to stay on my farm and farm.
Farmer Tom Lauerman wants to succeed where others may fail by branding his own image on product. However,
right now we're facing bankruptcy and our farm is up for foreclosure.
he hopes to hang on long enough to put the 2015 crop into the ground. For Nightly Business Report, Jane Wells, Vancouver, Washington.
Organically grown, it said right there. Have you purchased your Powerball ticket yet? The jackpot now close to $500 million, almost $500 million. That's before taxes, the third largest Powerball prize ever, but yeah, it's big enough. The fifth largest lottery prize in history, and that has people dreaming big.
I have a son who's about to start college. I have 2 other ones to follow. I work every day, so does my husband, and why not? A nice little bump would help.
I don't consider myself lucky, and I just feel it's throwing away money, which I shouldn't really. If you don't play, how are you going to win?
You're going to win indeed. That's the fun part. The not so fun part, you won't likely win. The odds are 1 in 175 million, and according to the Multi-State Lottery Association, you are more likely to die in a lightning strike, since we're talking happy thoughts here, 1 in 136,000, or to be killed by an asteroid, 1 in 700,000. I'm surprised the odds are that low on that. Or be attacked by a shark, not the shark that danced next to Katy Perry in the Super Bowl. 1 in 12 million there.
You had to spoil the dream, didn't you?
Right.
Hey, you never know.
You never know.
Good luck, everybody. All right, that's Nightly Business. Hopefully, if we're not here tomorrow night, we won. That does it for Nightly Business Report for tonight. I'm Sue Herrera. Thanks for watching.
Thanks for me as well. I'm Tyler Matheson. We'll see you back here a lot richer tomorrow night.